Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Having a look at this week's economic calendar, you better all buckle up because we are in for one roller coaster ride, with this week absolutely being jam-packed, full of black star events, everything from the consumer price index, the producer price index, Empire State Manufacturing Index, employment change, unemployment rate reports, and even interest rate decisions being released throughout this week from a range of different countries. Amid the fallout from the biggest bank failure since 2008's financial crisis, investors will, however, be primarily focusing on the US inflation data that will be released tomorrow, that is Tuesday this week. That will be a key test for markets already under pressure from worries over the Federal Reserve's campaign to tame inflation. Additionally, the European Central Bank is expected to deliver another massive rate hike. The UK is also set to announce its latest budget, and China is set to release a flurry of economic data this week. So as I said, buckle up and enjoy the trading this week. And as always, just please ensure to manage your risk appropriately and protect your capital.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar slid this morning as authorities stepped in to cap the fallout from the sudden collapse of Silicon Valley Bank. The US government announced several measures early this morning in Asian hours and said all SVB customers will have access to their deposits starting today. Officials also said depositors of the New York Signature Bank, which was closed Sunday by the New York State financial regulator, would also be made whole as at no losses to the taxpayer. The SVB collapse led investors to speculate that the Fed would now be reluctant to rock the boat by hiking interest rates by a supersized 50 basis points this month, with the spotlight now firmly on tomorrow's inflation data release. Having a look at our analysis on USD JPY, we can see that we now broke into that support zone at 134. Should this support zone be broken and we can get a close around that 133.7 level, we can see this pair fall all the way back down to that next primary support level at 131 as the US dollar potentially loses more ground. Now let's move over and see what's making headlines on Wall Street. US stock futures lifted nearly 1% after major indices closed the previous week with significant declines. The main topic on everyone's lips this morning is the SVB collapse, and more importantly, where the money will be coming from to pay back depositors. Well, the money to fully reimburse depositors of the closed Silicon Valley Bank will be furnished by other banks, not taxpayers. The Deposit Insurance Fund, which will cover the deposits, is funded by quarterly fees assessed on financial institutions and interest on government bonds. Using the DIF to soar up deposits is seen by Biden's administration as a way to avoid reigniting the public anger sparked by the 2008 taxpayer-funded Wall Street bailout. Having a look at our analysis today on the S&P 500, we can see as well that we have now broken back into that resistance zone at 3,925. Should this zone be broken and we get a close above around that 3,935 level, we could see this specific index rally all the way back to that next primary resistance at 4,000. Should we break back below this specific resistance level, then we will most probably go back to retest that low point at 3,850. Now let's move over to commodities. Oil prices rose slightly this morning as a brewing banking crisis in the US spurred expectations that the Federal Reserve will be less hawkish in the coming months. Although caution still persists over a potential economic fallout, a weaker dollar bodes well for commodities denominated in dollar, as this also helps the demand by making crude cheaper for foreign buyers. Brent oil futures rose 0.2% to $82.99 a barrel this morning, while WTI crude rose 0.2% to $79.92 a barrel this morning. Having a look at our analysis on crude oil for today, we can see that we are inside that resistance zone currently at $77 a barrel. Should this zone be broken and we can get a close around that $77.8 a barrel level, we could potentially see this pair rally all the way back up to our next primary resistance level at $82 a barrel. Should this resistance level, however, hold up, well, then we are going to look for short positions again. However, looking at the current fundamental data, personally, I do believe we might see a really nice rally today in this specific commodity. And finally, let's finish things off with cryptocurrencies. Bitcoin and other cryptocurrencies rallied after US authorities announced plans to limit the fallout from the collapse of Silicon Valley Bank. The US Treasury and Federal Reserve announced a range of measures to stabilize the banking system, which did raise concerns with some traders, and for these traders now to move their assets to cryptocurrencies. Having a look at our analysis on Bitcoin, Bitcoin absolutely shot straight through that primary resistance level at 21,600. It's currently trading around that 22,450 level. Should we stay above this level, we can see this specific pair rally all the way back up to our next primary resistance level at 23,200. And should that be broken, well, then we're going to be aiming for that 24,800 level once again.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the best be with you. Cheers.